Hey, good morning. Happy Monday. Hope you had a good weekend. Hope you're out buying houses because now is the time. Refinance, now is the time. We're going to talk about a few things today. We're going to talk about those crazy millennials and if you are a realtor, how you need to approach them because they are going to run this market. We're going to talk about some of the obstacles the millennials are running into. A little bit of Fed news. I know that excites everybody. What is the average down payment? We're going to bust that myth, that 20% myth again, and I'm going to let you know what the average down payment is. We're going to talk about private mortgage insurance. Yes, the P word. We're going to talk about private mortgage insurance. How can you drop it? Not to be scared of it. And when your lender automatically has to drop it. A few things that people may not know. And then we're going to talk about how the top 4 tips on if you're buying a house, how to be competitive in this market. And of course, any questions you have, please type them in the bottom. All right, let's go. Millennials, well, Fed. The Fed is saying, and again, we talked about Dave Kozar. How are you, my friend? Exit realtor and public servant, a man of many talents. Thanks for watching, pal. Be safe. See, Dave, you flustered me. Now I don't know where I was going. Oh, the Fed is saying if the market tends or continues to recover as rapidly as it is, they are going to discuss the movement in rates. Laura Martin Marquardt. See, you're on time, Laura, and I started early. Coldwell Banker, Clarendon Hills. Good morning, Laura. They may consider the issue of moving rates. Now, again, mortgage rates are not directly tied to the Fed funds rate in a roundabout way. Fed funds rate is, again, the money that banks lend to other banks overnight. It's like a sleepover for money. That right now is at 0%. Again, do not call me and ask me for a 0% mortgage. If I could give you one, I would. So keep an eye on that. Again, mortgage rates are tied to more or less the 10-year Treasury. 10-year Treasury on Friday, I want to say was about 1.63, 1.64. As that rises, so do mortgage rates. But keep in mind, young pups, if you are not a millennial, you saw mortgage rates. I mean, I think I was looking at something a few days ago. I think 1997, the 30-year fixed was 7%, close to that. But anyway, rates are in the 3s for Christ's sake. Sometimes they're in the 2s. So don't complain about the rates. What you need to learn and what you need to understand now, Doug Carpenter, good morning, my friend, Coldwell Banker. What you need to understand is if you're out purchasing a home, what you qualified for last year, what you qualified for maybe even 90 days ago is not the same. 90 days ago, you could get a 30-year fixed rate in the high 2s. You're not going to get that without paying points. That's a whole different story. So go back to your lender. Call me. Find out what you can afford. Due to that, the average loan application last month was $411,000. That's the highest it's been in a long time. Reason being, limited homes, higher mortgage rates, higher prices for homes. Homes are flying off the market, as we noted. I was talking to a client yesterday, and he brought up a good point. There's plenty of houses out there that they consider they're testing the market. They may have it listed crazy high just to see what happens. And it may sell. It may not sell. What you need to watch out if you're buying at the high end of the market is the house needs to appraise out at that dollar amount. Say, guy has his house listed at $500,000 and it appraises for $450,000. Well, guess who has to bring in the other $50,000? You, the home buyer. And that now brings it to the purchase price. Then you payments here in just a second. Actually, let's talk about them now. The average down payment. Dave Gallis, how are you, my friend? The average down payment. And the myth is, and I know we've talked about this before, you do not need 20% down. If you do not have 20% down, you're going to have private mortgage insurance. We're going to talk about that in a minute. I got so much stuff to talk about today. Very exciting. So the average percent down for all home buyers, average percent down according to the National Association of Realtors and Mortgage Professionals is 12%. 12%. The average, if you are 22 to 30, Rick LeStrong, good morning. Congratulations on the car show. Beautiful car. 22 to 30-year-olds are putting down an average of 6%, 31 to 40, 10%, 41 to 55, 13%, 56 to 65, 18, 66 to 74, 23. And if you're 75 to 95, thanks for watching, average home putting down is 21%. So out of all those age ranges, from 22 to 95, only 2 buckets are putting down 20%. Again, the average home buyer is putting down 12%. That brings up private mortgage insurance. Private mortgage insurance is not a bad thing. Private mortgage insurance is required if you put less than 20% down. It is determined on how much you put down. It's determined on your credit score, determined on a whole bunch of things, but it's not a bad thing. It's required. There is a way to kind of get around it. You finance it into your loan. Sometimes that's a best option. You can do it upfront, pay it all upfront, or you can do it monthly. Entirely up to you. And it's tied to your credit. It's tied to your down payment. There's two numbers to remember: 80% and 78%. 80% you can request to have your private mortgage insurance drop through your lender. Call your lender, say, hey, I'm at 80% loan to value on the original sales price at the time of origination. Or at 78%, I don't know why it's that number. At 78%, your lender is required to drop your private mortgage insurance. So if you think you're right around that dollar amount, you're 78%, call your lender. They need to drop it. They do. It's automatic, but nobody's perfect, except for me. Anyway, am I canceling? That's a good idea. It's a great idea if you're there, if you're in the house, the original purchase price. And you want to make sure that you're on time with your payments, you've had no late payments, and your house hasn't devaluated. And right now, I couldn't imagine that. All right, millennials. If you're a realtor or if you are a millennial, millennials are really the ones that are going to drive this market in the first-time home buyers. Number of young people, it's 18 to 29, living with family members increased to 52%. 52% 18 to 29-year-olds are living with family members. It's the highest since the 1930s. It's mainly due because colleges and universities had closed down and kids had moved home, but you got a ton of people living at home. Most millennials view home buying as a good investment. Again, a wise woman once told me investment is in your bricks. It is a good investment. It's a costly investment. Keep in mind repairs, keep in mind what you're getting into, but millennials are saying it is a very, very good investment. Millennials are also the highest educated home buyers than any other age segment. They also have a nice income. Millennials have the second highest average income. It's about $105,000. They find it very difficult to save for a home because of all those IPA beers, I guess. So they find it very difficult to save for a home. They are concerned. There's 4 or 5 areas that are concerned that if you're a realtor, you want to be aware of, and then you can send them to me. They won't have to be concerned. They're concerned about the paperwork. They're concerned about understanding the process. They're concerned about saving for a down payment. They're concerned about closing. They're concerned about getting an appraisal. Well, they don't have to be concerned about any of that. Paperwork for a mortgage, whether you're a millennial or not, has actually gotten much less. For instance, here at Prime Lending, we will do, when you apply, we send you a little form, you click it, and we get your pay stubs. We get your bank statements. We get everything that you need, mostly everything. You hand us a couple of pieces of paper, and you're good to go. So you should not be intimidated by that. Understanding the process, number 2, again, that's when it comes to your lender, walking through your millennials and understanding that process. Saving for a down payment. I can't help you with that. Get yourself on a plan. But keep in mind, there are programs, 0 down for vets, thank you very much, up to 3%, 3.5% on FHA. So there are ways that you don't have to wait to save 20% if you need to buy a house. Closing's really not rocket science. You don't have to do anything except show up. Actually, here at Prime Lending, we do an e-sign for closing. What that means is the day before closing, you're going to get some emails from me, and you're going to click away, and you're going to sign most of your documentation on your computer, or on your phone, wherever you want to sign it. Meaning, when you get to closing, there will be very few documents for you to sign. So it's a fairly easy process. And getting an appraisal. Again, I don't know why that's a big concern because you don't have to do it. We do it. We call, we get it. And again, remember, in some instances, there are property inspection waivers where the appraisal is not needed based on the loan to value, again, based on the down payment. But again, you shouldn't be concerned about getting an appraisal at all. Again, the average mortgage app last month was $411,400. Average purchase apps declined by 4% last month. Average refi apps went up 4%. Coincidental, I know. Pre-approvals are crazy. Again, I harp on pre-approvals, but you need that letter saying, hey, I talked to John, I'm good to go. Here, Mr. and Mrs. Realtor. When you write my offer, hand it to the seller, and away we go. And in this competitive market, there are 4 things to make yourself competitive. And you heard them here first. Be ready is number 1. Be pre-approved. Pre-approved. Be ready to go. You don't want to look at a house, like a house, then call me. I can get you pre-approval in 15 minutes, but you would rather have one before you hop in one of these lovely realtors' cars or follow them into a house and have someone behind you that's already pre-approved. Limit your contingencies. Contingencies meaning you want to limit any obstacles you're going to walk into. You want a clean pre-approval with limited contingencies. Contingency could be, I'm going to buy your house, but I got to sell mine first. Happens all the time. But someone comes in that's pre-approved that doesn't have to sell their house is a stronger offer. They may make a lesser offer, but there's less contingencies. Think beyond the price. You want to make a larger earnest money down payment. Earnest money is when you make an offer, you write a check saying, I'm so serious about buying this house. Here's a check for X amount of dollars. Can be any amount. The larger the earnest money, the more committed you are, which makes you a more attractive buyer. So again, pre-approved, limit obstacles, think beyond the price. And don't ask for small repairs. That's another one. So bigger earnest money and don't ask for small repairs. If you're going to go back and forth willy-nilly and negotiate and want the drippy sink fixed or the outlet cover put on, again, it's going to make you a lesser offer than someone that comes in and says, hey, I like your house, I'm going to take it. Something major, it's up to you. Do what you want to do. And make your best offer. Go in strong. Going back and forth, again, with this market and how the market is going, it's not going to be real strong. You're going to go in and lowball them. You're most likely not going to get it because this market, homes are selling over list price. A lot of cash offers. If you do buy a house for cash, just to get the deal done, you can do a cash out refinance and not have the bumps in the rates within a certain amount of time. Long story, call me about it. So there's a lot of stuff going on. Cancel your MI, go after your millennials, and be prepared when you buy a house. I'm here all week.